You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Thursday, October 4th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from Investing.com. It's the top 5 things to know in the market on Thursday. The first thing to know is U.S. Treasury sell-off continues. The sell-off in U.S. government debt continued into a second day on Thursday, sending the yield on 10-year Treasury notes to levels last seen in 2011. The yield on the benchmark debt was up 1.66% to 3.214 by 5:55 a.m. Eastern Time, after jumping almost 4% in the previous session. The U.S. dollar index was at 95.58 after hitting an overnight high of 95.78, the most since August 20th. Second thing to note today is Wall Street was poised to open sharply lower. The U.S. futures pointed to a sharply lower open on Wall Street as a spike in Treasury yields and expectations for future Federal Reserve rate hikes weighed on market sentiment. Third thing to note today is oil prices pulled back from 4-year highs. Oil prices backed off 4-year highs after a day after data pointing to the largest, biggest build. Someone needs to hire a copy editor. Oil prices backed off 4-year highs a day after data pointing to the largest build in U.S. crude stockpiles since March 2007, and reports that Russia and Saudi Arabia reached a private agreement in September to increase oil output. London traded Brent crude futures were down 0.21% to $86.11 a barrel from their last close, pulling back from the high of $86.74 reached Wednesday, the most since November 2014. U.S. crude prices slid 0.21% as well to $76.25, not far from Wednesday's 4-year peaks of $76.89. U.S. oil stockpiles rose by nearly 8 million barrels last week, according to a report from the Energy Information Administration. Costco and Constellation Brands report earnings. Constellation Brands, the maker of Corona beer, will be in focus as it releases its financial report before the morning bell. Analysts are forecasting a profit of $2.61 a share on sales of about $2.25 billion. And fifth thing to note today is jobless claims and the Fed speakers on tap. After better than expected private payroll numbers, investors are looking ahead to jobless claims numbers ahead of the government non-farm payrolls report for September on Friday. U.S. private sector employers added 230,000 jobs in September, much more than expected, according to a report by payrolls processor ADP on Wednesday. Initial jobless claims are released at 8:30 a.m. Eastern Time. Economists expect that weekly claims for first-time unemployment benefits edged down 211,000 from the week before. Our second story today is from MarketWatch.com, 3 reasons why U.S. government bond yields are soaring. The biggest sell-off in the long end of the Treasury market since the day after Donald Trump's presidential election victory in November 2016 saw analysts over multiple reasons why panicked investors were dumping their holdings of U.S. government paper on Wednesday. The 10-year Treasury note yield jumped 10.3 basis points to 3.161%, its highest since July 2011, making its largest one-day yield rise since March 1st. The 30-year bond yield advanced 11.3 basis points to 3.32%, its loftiest since September 14th, staging its largest daily climb since November 9th. And here are the most popular explanations for the carnage. Extraordinary growth is one reason. Most investors pointed the finger at improving economic prospects after the Institute of Supply Management's services gauge logged its second highest reading in its history. The second reason is fading pension funds, but others were skeptical that the sell-off had much to do with more evidence of economic strength. The third reason is bearish positioning, yet others cited heavy bearish positioning combined with short-term traders waiting on the sideline who were ready to add to the selling pressure once the 10-year note and the 30-year bond yields reached key chart levels. Our third story today is from CNBC.com. GM tops Tesla in ranking of automated driving systems. As more automakers develop automated driving systems that allow drivers to take their hands off the wheel for short periods of time, a new report says General Motors has developed the best system. Consumer Reports tested 4 of the most popular systems and says Cadillac's Super Cruise does the best job of ensuring the vehicle is driven safely while making sure the driver pays attention when they take their hands off the steering wheel. Super Cruise has a camera that looks at the driver's eyes and warns them if they look away for too long or fall asleep. And that's a game changer, said Jake Fisher, Director of Auto Testing at Consumer Reports. This is definitely a shot across the bow of Tesla, which already has autopilot, said Michelle Krebs, analyst for AutoTrader. And that, ladies and gentlemen, is news you can use. For today, Thursday, October 4th, 2018, your options news rundown. And if you haven't heard, MTM, Market Taker Mentoring, is having a really big webinar today on generating income, specifically using covered calls. You can attend this webinar by going to markettaker.com/smartweb. That's market, like stock market, taker, like you take something, so 2 T's in a row, markettaker.com/smartweb. Trade well, have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.